Someday. Oh, there it is. All right, we're live. It's funny. You always wait for that thing to, okay, now you're live. All right, we're live. Today is another episode of Real Estate Jerky Live where we talk about different things. And today is home loans again, 101.2. I'm going to be asked some more questions by Bobby, and we're going to get going. But first, before I let you in charge, do you mind if I go over some headline stuff that I don't want people to freak out about when they see it out there? Are you good with that?
Yeah, please do.
I'm going to share a screen so it's easier to follow. All right, share screen. All right, so so this is the big one, right? So for everybody who wants to know, don't believe everything you read. The truth has many headlines. No kidding, right? I mean, that's the biggest thing. People read the headlines and they don't read anything else, right? Yeah. And then most articles these days, I don't want to get political here, but most articles say this, and then that's what people forward before they actually read the actual article that says, if this happens, this potentially the headline could happen, which is, ridiculous. But anyway, so people are thinking foreclosures are spiking. They're using certain numbers out there to manipulate the numbers to say that they're spiking, when in reality, they are not. Just we have such a low foreclosure rate right now. So if anything goes up, anything at all, then it actually looks like it's spiking. And so that's not happening. So none of the pandemic forbearances are causing a rash of foreclosures. So if you just go ahead.
I was going to say, I know there's a lot of there originally was a lot of speculation as to if that was going to be the case, but then I think it actually was you I was talking to that was saying that anybody who was even like a little bit late on one payment was automatically put into forbearance, which drove up the numbers.
Correct. Well, the number actually, they thought there was going to be 30% of the people out there were going to go into this forbearance period or have problems during the pandemic. I think it was the number was about 8.5% is the only amount that actually went into it. And currently we're at less than 2.5 people still in forbearance. And if in those people, of those, 87% have enough equity to where they could sell their house and not go foreclosure if they needed to, but most of those will work it out with the lender. The other 13% that was left is only about 244,000. And that is an average yearly foreclosure rate we've had over the last 3 years. So that's gotcha. Really, it's a drop in the bucket. So none of that's really going to happen. So you're probably going to see a small amount. So any foreclosures that are happening are just happening for other reasons, not because of this. All right.
Which for anybody in the market, that's actually a good thing, because when you're dealing with the foreclosure, you're going to the bank, the process moves slower. And if you're dealing with a short sale, it's even slower. So having a regular market with regular sales, that's good.
Well, the issue was, okay, so I'm gonna go back to this. So last time we had that ton of foreclosures from 2006 on. They were not a unique thing for the market. They were actually the trend in the market. So every time one of those foreclosures would come on and be sold, that was the new value for the neighborhood. Now, if foreclosure happens in your neighborhood, it's a unique situation, not the normal situation. So they'll discount it and won't even use it for value. Are you following me there? Yeah. All right. So the other thing I wanted, just two things, and then we'll get into what we want to talk about. They were talking about rising. You hear this all the time. Rising mortgage rates are going to slow the housing economy. If you look over the history of from 2000 to 2020, and you look at how rates went up during the period of time, houses sold during those period of time. The only time that was opposite than that was falling was during the Great Recession. But since then, you can see that they went up in 2014-ish. Right here, and then started coming back down in 17-ish, and then back up, and then now we're down to where we are now. So rates are still historically low, even though we've came up from the bottoms. And this just shows you house prices impacted by mortgage rates. It doesn't happen. So even though rates are going to go up, we're not going to see what people think we're going to see. So it's still going to be a strong housing market. It's still going to happen. We're going to go into recession. It's just going to happen, and the values will continue to rise, and eventually rates will come back down. Did you have any more questions or anything before I get rid of the screen?
No. I think that pretty much sums it up. That's attacking the one objection a lot of people have is they think that interest rates are going to go through the roof and they won't be able to afford a home, and there's going to be all these foreclosures, so houses will be cheaper, and we're just not seeing that right now.
Well, and we are seeing, are you seeing any more inventory before we get into the 101?
No, we're not having any more inventory. We're still pretty consistent.
Right. And I actually saw some numbers that were saying that the values were up, again, shocking, but we have even less inventory than we've had last year at this time, which last year at this time was during the pandemic. And we keep saying that, and less people were selling their houses. Yes, people were moving, and we sold a lot of houses, but we didn't sell anything close to like 2 or 3 years prior during that period of time. So for the values that are happening now, and the fact that we are going through this, and we're still seeing record number of sales with the limited inventory, tells you if we had more inventory, it would be sold.
So I can tell you from personal experience last year, listing some rental properties, stuff like that. I think a lot of the inventory that we saw come on the market, especially like beginning of like summer, were a lot of these rental portfolios that people had for a long time, because they're speculating. They're like, oh geez, I have 10 rentals, and it looks like people are going to not have to pay rent for a year, stuff like that. I'm just going to dump them and put them on the market. And so we gave a lot of folks 60-day notice to move and just put it on the market, and they sold within a day.
Right. So basically what you're saying is there was a lot of people selling rental properties to get rid of them, not the average person. And that's what, we'll get into the loan stuff, but basically going forward, I think there's 85% of all sales right now are existing home sales. I have a feeling that's going to go down to even lower because people are in a low interest rate. They've set up their house to stay there, and where people are going to stay in their houses a lot longer, like they did in the 50s and the 60s. So you need to get into your house now so you can stay there like everybody else.
Okay, so which kind of ties us into what we're going to discuss also, was how much money do you really need to buy a house? And I know I'm going to make you do some math. So
well, luckily I brought a calculator because I can't bring in my other lap. So I use Apple in the studio, and you can't run any of the software programs that we use in our industry on Apple for what I do.
Of course, right?
Of course,
it has to be difficult.
No, it's just our industry has to be not current. How about that? Yeah, it's would be so much easier. But anyway, so how much? All right. So if you want to start with first time home buyer, right?
Yeah, we'll do first time home buyer. Median home price 400, 415.
All right. So let's just do 400. It's an easy round number, right? So every 100,000, there's 4 of them. So basically, if you're doing a first time home buyer program where you haven't owned a home in the last 3 years, and you're doing the 3% down conventional, that means your FICO score is 700 or greater. That's on 400,000. You times it by 3%. That is $12,000. Pretty easy. Didn't need a calculator for that. So you need $12,000 for your down payment, and then you'll need money for closing costs and setting up that impound account. We'll get into in a second. So your average closing costs for escrow title fees that you negotiate with the seller, right? That's your guys' side. I see it's between $3,000 to $3,500 on average. Correct. And then you don't say, well, you said it was this. I'm like, I have no idea which title company you're using. I don't have any idea because each title company has different fees and different price points. So it's like buying a different car. Every car has a different price. They're not all priced the same for the same, say a F-250 and the same model, and GMC or Chevy are all going to be different prices, right? Same thing here. So, and then when you set up your impound account, what your impound account is your taxes that you pay yearly twice, and then your insurance that you pay once a year. So when you first get into the contract and you're going to close, you're going to pay 1 year of insurance up front, and then they're going to put in 2 to 3 months of that dollar amount of what you pay monthly into the impound account. And then also, depending on the time of the year, how many months of taxes. So right now, I think we're putting in 6 months of taxes. So if your taxes are $500 a month, that's $3,000 there, plus the 1 year of insurance. So I always tell people you need between $7,500 to $8,500 as for closing costs and impounds, right? And that's inexpensive. That's if the lender doesn't have any underwriting fees, processing fees, any of those garbage fees. So make sure they don't. If they do, ask them to get rid of it. And most of them will say, I can't.
Yeah, and I see that's a place where a lot of folks they say, hey, I have the 3.5% down, but they don't realize until they talk to someone that they're going to need a lot more money than that. And so then you get into gift fund situations, which is possible, but it's always best just to come in with the money you have.
Yes, but we use gift funds all the time, and I'm not trying to discount what you said. If you have the money for the down payment, you're way above a lot of people, right?
Absolutely.
Right. So, and for the closing costs, it used to be we could go to the seller and say, hey, we're going to give you this, but now we're going to raise it to this, and we want that money for closing costs. Or you come to somebody like us and you say, hey, can I get some rebate to pay for some of my closing costs? Prior to the pandemic, easy, no problem. We go an eighth, to quarter in the rate difference and get you $3,000 to $4,000. During the pandemic, it was all gone. There was none of that really there. The rate was so high to do that. And the reason they did that is they didn't want you to buy and then refinance 6 months later and all that. Because when we do loans and we initiate the loan, there's a cost in doing that loan. The payback is 6 months. Okay, so that's the break even. That's why there is what we call early payoff for us and other people if you do a loan and then you pay that off or you sell. I got a kid who I helped buy up in Tuolumne County, and then he lost his job 3 months later and he had to move to Arizona. Well, he had to sell his house. Well, that's just things like that happen, right? Mm-hmm. So that's okay, but they don't want you to go, okay, I'm going to get a new loan now, right? And get all this money. And then in 6 months, do a half or at 1 point lower in interest rate and get a totally different loan, right? Because then they didn't pay for it. So am I rambling? You understanding?
Well, no. So what no, it's good. It's all good information. What I was thinking was like, how do you advise people to receive gift funds if they don't have that money saved? Because what's the best way for a lender to describe that? Because I know they have to see documentation, and you can't just have $10,000 cash end up in your checking account.
No cash at all, right? You can't have deposits of cash because we can't use it. There's that's the Anti-Money Laundering Act. We have to prove where all the money goes through, and that came into effect a few years ago. Basically, the best way to get gift funds is just have whoever is gifting those gift funds send that money directly to escrow. We need less documentation on conventional. We just need the wire stuff in there on FHA. We need possibly proof that they have the money on the bank statement. So it just depends on. But the best way is do not receive the money ahead of time, because if you receive the money ahead of time, then we have to have proof that the person who gave it to you has access to that amount of money. Plus, you have to have proof of you depositing in your account, proof of the fact that you're wiring out of your account. So if you just have them wire it directly to escrow during the process, like we'll have them fill out a gift letter saying this is what we're going to do. We submit that with a file, gets approved, and then after you sign loan documents, you have them wire the money to escrow directly. So much less documents, so much less everything, and it makes your life and our life so much easier.
Yeah. No, I want to go over that because it's a question I get asked a lot, and it's a big way to jam yourself up if all of a sudden you have this cash and you can't prove where it comes from, and then they want to see everyone's financial history.
Right. And if you have cash that you've been saving, it's in your safe, talk to me ahead of time. I'll tell you how we can deal with that and get it to where it has. Now, if you put in your account, you just have to have it seasoned for 60 days. That means 2 bank statements that do not show that deposit. Are you following me here? So you can take that money and deposit if you're not going to buy anything for 3 months. But if you have it and you want to buy now, there's other ways we can get that, so you can use it with other things, and we won't get into that live.
Yeah. Gotcha. Okay.
Right. Anyway, so and it's nothing illegal. It's just a different way to get it to where you have it, because you just get that money as gift funds, right? And that's all we're saying. We'll just leave it at that.
So on average, probably about 7%. If people had that at the purchase price, they're going to be in a safe spot to be able to cover the origination fees, everything like that, down payment, closing costs.
Right. And let's clarify what you just said, the origination fee. All right. So I hope there's no origination fee. All right. So let's talk the lender side. And the first box of the loan estimate, all that is profit. Okay. The discount points is actually buying the rate down. So if you have origination fees, underwriting fees, and processing fees in that first box, that is all profit for us as a lender or whoever you're going through. I set up differently because I do a lot of VA loans. I do a lot of things cheaper. So we don't have underwriting fees or processing fees or whatever application fees and that kind of stuff. We get paid when we sell off the loan to whoever we're going through at the time. That's how we get paid, because we get asked all the time, how do I pay you? You don't pay us. You're paying. It's the same way if you went through I don't want to say another lender or a bank and they pay the loan officer, right? You don't pay the loan officer directly. Same thing here. We work with wholesale lenders. We get paid once we submit that loan and sell that off to that property, or that company, I should say.
Gotcha. Okay.
All right. So let's go back so we went through the closing costs. Well, let's just talk about down. 3% down conventional, 400,000 is 12 grand. FHA is 3.5% down, so you need 0.5% more. And a lot of people go, why would I go FHA? Well, if you have a less than a 700 FICO score, we'll run the numbers, look at FHA, look at conventional, look at the difference in mortgage insurance, look at the difference of different things to see which is the better program for you. A lot of people go, I want to go conventional to get rid of the mortgage insurance. Yes, but conventional rates are higher than FHA rates, because FHA and VA are pretty much subsidized by the government. I say they're not going to say that, but that's basically what it is. The risk factor is just not there as much as the conventional. So on 400,000, because I don't know if that times 0.35, that's $14,000 you need instead of 12,000. So now $2,000 more.
Which for somebody who's been saving is very attainable.
Correct. But I mean, I say talk to your family, get a gift, work something out with them. If you have to, to pay them back over time and give them a gift back, whatever it is. Most of the time when you get a gift, you always feel guilty that you always want to give a gift back. So.
Absolutely. I know what you're saying.
Yeah.
Well, in the essence of keeping it short, that way we can spread it over time. Because I know in the previous Facebook Lives, we put a lot of information in there.
Right.
So I think the next time we meet, I want to talk about FICO score and have you really go in depth on that. Okay.
And then that'll be next week, because this week being Thanksgiving, we're not going to be here on Thursday to talk about things. So we'll be here next week. And we'll look at the schedule, whether it's it'll probably be Tuesday. You good with Tuesday for next week, or what do you want to do?
Yeah, I'm good for Tuesday and possibly Thursday if you're available as well.
Yeah, I'm good, because we're this weekend on the radio. We are having just Marlene and myself, and I'm not going to do a live with myself. So.
Okay.
Because it was, we were supposed to have a plumber, but he, issues came up with, so they had other things that happened. Hey, it is holiday season with plumbing. You know how that is. A bunch of people at your house, you always have issues. So.
Absolutely. Someone will throw some turkey bones down that disposal and think it's going to disappear.
Oh, yeah. Something like that. Yeah. We'll leave it at that. All the older homes who've never had the plumbing checked in a while, they'll have issues. So it's a busy time for them. But yeah, it's important. By the way, if you have nothing else to do today and anybody wants to, I'm doing live. Actually, I'm live on radio, KFIV 1360 from 3 to 4 today and tomorrow for the Mike Douglas show. I'm stepping in, taking it over for him while he's on vacation. So feel free to check it out. You can go to the iHeart app, or you can go directly through if you have AM radio. And feel free to call in and harass me and answer questions or whatever. I'm there for you. So,
and what's your topic today?
Don't know yet. Probably going to be talking, headlines, what's going on out there. If I say that it's going to be about the Kyle thing, or the fact that we're under siege for being able to protect ourselves, I might get a lot of hate mail, but that's okay. It's probably going to be something along those lines. We'll find out. I'm working it all together, because you can talk just like now. We've been talking for 17 minutes, right? I have an hour to talk during that period of time, but technically I only have about 20 some minutes. So
in between commercials and stuff.
Yeah, so it's hard to get a really in-depth conversation going, but it's important to get that stuff out there that we're all concealed weapon permit holders, a lot of us in Stanislaus County. And how's that going to affect us if we accidentally, but you pull the weapon because you need to protect yourself, and you have the media come after you because of the fact that you're protecting yourself. But anyway,
that's scary.
This is real estate, not the other.
It all ties together, right?
Yeah, it's community. And that's why we have that stuff on the radio show all the time. People always ask us, why aren't you talking about, mortgages and real estate? Well, we do for about 5 minutes, but people don't want to hear the same thing over and over again each week. So we talk about community, which is very important, because where you buy because of the community. So.
Absolutely.
Again, thanks for taking over today. I'm going to take it back and take us out.
Thank you, Ed. I appreciate it.
And no, it's great having somebody who wants to do this as much as I do. So thanks for coming in, Bobby. I appreciate it. Yeah, everybody out there, have a happy Thanksgiving, and be thankful. Make sure your family knows what you're thankful for. And again, thanks for showing up today. And if you're watching this afterward, just let us know if you like it by following us. All right, have a great day.